Will interest rates keep going up to fight inflation? What happens when interest rates do rise? And inversely, what happens when they fall? What does history tell us about interest rate increases and decreases? Will the Federal Reserve and the other central banks keep increasing interest rates to fight inflation? Will they pause or will they start lowering them again? That is what we're going to be looking at in this video. So let's jump straight in. The Fed and other central banks like the Bank of England have maintained that bringing inflation down is their main priority, and they will increase interest rates until that's achieved. But what is the aim or the reason for increasing interest rates? And the aim of increasing interest rates is to lower inflation. And you lower inflation by reducing the money supply and amount of liquidity in the financial system. This is also called quantitative tightening. A side effect should also be that savers get more interest in their accounts if banks pass on the interest rate increases, of course. And what are the disadvantages of increasing interest rates? Because what they don't explicitly mention is the pain that people have to go through when interest rates increase. Because raising interest rates increases the cost of borrowing for everyone, and that is for consumers, businesses, and even governments. So if borrowing becomes more expensive for everyone, fewer people or businesses will borrow, fairly evidently. And those that do take out a loan, for example, will be paying much more to do so. So they'll find it more difficult to pay back the interest due, and they'll therefore have less disposable income at the end of the month, or even less profit for a business. You only have to check out the news to see how much higher mortgage rates and payments are now compared to when interest rates were low. Secondly, when interest rates rise quickly, this can slow growth in the economy and even lead to a recession. And asset prices normally fall and volatility increases when you raise interest rates, which is why a lot of people try to reduce their risk and they move to safer, probably more liquid investments during these times. And this is at a government level also, because for quite a long time now, some people have tried to second guess the Fed based on what's happened in the past, and they've thought that they're going to pivot, they're going to lower interest rates soon, and they're going to have to increase liquidity or print money again. And when you look at the condition of the financial system we have today, you can understand why people have said that. For example, as you can see here, a graph of the federal total debt as a percentage of GDP in the US, and GDP essentially means growth. And what you can see here is that it was 118.5% in Q1 of 2023. So there is basically more debt than growth, which obviously can't be good. And let's now look at the interest payments that need to be made to service this huge debt that exists. And you can see that interest payments reached $969 billion in Q2 of 2023. So we're approaching $1 trillion in interest payments in a quarter. So we can see how increasing interest rates, and therefore the cost of borrowing, affects governments also. The fact that they keep increasing their debt doesn't help either. And I covered a lot of these metrics in a previous video on the 12th of July, asking whether I thought we were heading for a recession and the reasons for this. And you can find a link to that video here. And if you are finding this useful, please do like and subscribe to the channel, as it really does help. So, people understandably say that surely they have to lower interest rates with the cost of borrowing increasing so much and all of these disadvantages we've just looked at. But is lowering interest rates the solution? Because the opposite, which would be having low interest rates, lowers the cost of borrowing. So more people would borrow, which is great for things like mortgage payments, loan payments, etc. But this actually increases the amount of liquidity in the system, otherwise known as quantitative easing. And this increases inflation, or in other words, it inflates the economy. And we're essentially then back to where we started all over again. So it's almost like a circle. High inflation also devalues the value of our currency. So the dollar or the pound, whichever, or the euro, whichever currency you have. So it's a really difficult balance to get right. And let's go back in history to see what has happened in the past and give us a good idea about what is to come in the future. So Looking at this graph of interest rates in the US, going all the way back to the 1960s, I'd like to point out two things to begin with. So firstly, I've indicated the main increases in interest rates through the red arrows on this graph. And secondly, the grey columns on this graph are the financial crashes that have existed. So you'll see the most recent one in 2020, the 2008 financial crisis, 1990 recession, etc., going all the way back. And what you can see here is that every single time the Federal Reserve tries to increase interest rates, a crash follows afterwards, and then they have to lower them again. And you can see the interest rate rise we're currently experiencing on the right-hand side. So what do you think is likely to happen next based on this? We don't know a time frame, we don't have any idea of when, but what do you think is more likely to happen based on what's happened throughout history? And what do I think will happen next with interest rates? Well, in my opinion, and I could be wrong, and this isn't financial advice, I would think that a couple more hikes or interest rate rises are likely. And they may pause where they are for a while and see what happens and bide their time before things start happening like inflation drops, wage growth drops, unemployment increases, more liquidity leaves the financial system, etc. And ultimately, and this isn't financial advice, interest rates will need to come down again with more liquidity being pumped back into the financial system. And that is when we should see asset prices increase again, like crypto, for example. And we saw that on the graph going all the way back to 1960s. Rising interest rates for a period of time in a large way will lead to a drop in the future. And it's really interesting to see more and more people agreeing and seeing the same signs in terms of the state of the financial system. But I'd love to know what you think. Do you think interest rates will keep going up? What do you think of the condition of the financial system we find ourselves in? So let me know in the comments below. And if you haven't already, please do like and subscribe, and have a great day.